What's good, YouTube? It's your boy Eliel. Welcome back to another video, and today I'll be sharing with you guys some of the things which I wish I knew before I started trading. And I promise you guys, this is a really important concept when we talk about Forex. So if you guys haven't been implementing some of these things, I'm gonna really advise you guys after this video to really pay attention and try and implement this in your trading. So without wasting time, let's go straight into the video. The first thing which I want to talk about is trading versus gambling. You know, these are two different concepts, because I see a lot of especially beginner traders, you know, we confuse trading with gambling. You understand? When we come into the Forex industry, we start gambling and then we forget what Forex is. Instead of us now, you know, trading properly, we start to gamble to get luck. You know, that's why you'll see some of the people, they want to enter the Forex industry, they have this expectation of, you know, making millions or even thousands of dollars in few weeks or in few months. You understand? So they will come and put a very small amount in their Forex account and expect to like triple it or like, you know, make so much money out of that money. And that's not how Forex is. And honestly speaking, you know, if you treat Forex like gambling, you will not really last in the industry for a very long time, because number one, it's very hard for you to have a sustainable, you know, income when you are gambling, because you can be lucky and get that big win, but trust me, if you don't know how to trade, you will lose that big money. You understand? But if you now trade Forex, you know, like a business, trust me, in 3 years, in 4 years, you will still be able to maintain, you know, your account and keep growing it. So if some of you guys really don't understand the difference between trading and gambling, you really try and go and understand, you know, how do I trade like a business and stop gambling? Because if you are putting small amount in your trading account and expect to flip it and triple it in few weeks, trust me, that's gambling now. Because trading is not really gambling. You really need to really understand things which we call percentage. You know, percentage really plays a big role in trading. And that's where it brings me to the second point, which I'm going to talk about. And the difference is lot size with percentage. I've noticed a lot of traders, we don't really understand the difference between lot size and percentage, you know, because if you can combine these two together, it will really help you, you know, to be very precise in your trading, to know exactly how much you're risking. Because if you ask some of the traders, how do you risk in your trading? They'll just tell you I use 0.5 lot size, or I use 1 lot size. You know, that's not really, you know, sustainable, or that's not really how you calculate your percentage. You need to know exactly, you know, the pips combined with your lot size to bring together your percentage or how much you are risking. That's how you should be calculating. So don't really stick into, you know, the specific amount of lot size, but I'll prefer for you guys to be trading a specific percentage. For example, you'll tell yourself that in each and every trade I'll be risking 0.5%, or I will be risking 1% of my trading account, and that way you can be able to grow. You understand? But when you're risking, let's say 20%, you're risking maybe 2 lot size, you don't really know exactly how much you're risking, because, you know, the pip size, it differs each and every trade. You cannot say each and every trade I'll be risking 20 pips or 10 pips or 5 pips. It will be different compared to each and every setup. So I'm going to advise you guys really to go and research on how do you calculate your percent in your account. You know, that will help you, because calculating a percentage in your account, you're gonna need two things. You're gonna need the amount of pips with the amount of the lot size to show you how much exactly you are risking. The third point which I really wanted to share is that we really focus into technical analysis more than our psychology. But in reality, you know, our psychology plays a big role, and it is the most difficult thing to master more than even our technical analysis. Because technical analysis, it's something which, you know, you can learn and, you know, and perfect it. But when we talk about psychology, it's something which we learn each and every day. Things like greed and fear and whatnot is something which, you know, it will really take time for you to be able to control them, especially if you're a beginner trader. You know, yes, we do need to know our technical analysis very well, but a lot of us, we do put all our focus in our technical analysis and we really forget about our psychology. And that's why we see a lot of us are not profitable, because we don't know how to control our emotions. For example, you will put your trade, you put your take profit and you put your stop loss, but you fail to allow your trade to hit your take profit. That is something which is psychology, which needs you to work on your psychology. It's not something which you're gonna need to work with your technical analysis, because technical analysis, each and everybody can master that, you know. Anybody can master our technical analysis, because those are just patterns which we really need to understand them. But our psychology, it's something which we learn each and every day, and it's something which, you know, it's really difficult to control, you know, because I cannot tell you to be numb with your feelings. That's impossible. But we really need to know how to control our emotions. That is why psychology really takes a big role when it comes to our trading. And I advise each and every one of you guys, especially for those who are not really paying attention to the they're not really paying attention to the psychology side. I really advise you guys to really sit down and start learning your psychology. Things like how to control your greed, how to control your fear, how to, you know, manage your emotion during the trade. Things like that, you know, it can really help you to improve in your trading. Number 3, this is something which I wish I knew before I even started trading. And this thing is called journaling. The importance of journaling your trade. That's very important. Some of you guys are really you neglect this thing because you think like we don't really need journaling our trade. And this is something which when I started doing, I really saw growth in my trading, because once you start journaling your trade, you will understand exactly when do you make mistakes. You'll understand exactly how to rectify those mistakes. You'll understand when does your trade, you know, perform the best, when does it perform the worst. Then you can be able to even, you know, try to fix your strategy or your setups, you understand. But when you don't journal, you will not really know exactly where do you make mistakes. And this is something which a lot of traders neglect, because they think, you know, journaling is not important. But this is really very much important, just like you placing a trade in your account. Because if you don't journal, you'll never know exactly when do you make mistakes. You won't really know exactly when does your trade perform, when does your strategy perform the best, or when does it perform the worst. You understand? But when you start journaling, you'll start to see exactly, okay, most of my setup usually happens at this time, because you journaled and you see that, you know, when you trade around 11 o'clock or 12 o'clock, that's when you see, you know, your result playing well. But when you trade out of these sessions, maybe the New York session or the London session, you will see that your trade don't really perform the best. From your journaling, that's when you now be able to know the statistics of your trading strategy or whatnot. So I advise each and every one of us, you know, to really pay attention into our journal. You know, there's different softwares which you can use. Journaling is not always, you know, it's not something you can pay. You can use your Excel to create your journal sheet, or you can even, you know, write down or something. You know, it is very much important. You know, it's as important as you having a trading plan, because in a business, if a business does not have, you know, their journal or their account journal where they put how much the business has made and how much it has expended, the business won't grow. They need to have a record to know exactly how the business is performing. That's exactly how it is in trading, because it is a business. We have to know exactly how are we performing in our strategy, and that's where we can be able to tweak in and fix some of the things in our trading. Very much important. And that leads us to the last and final thing which I wish I knew about before I started trading, which is understanding that you cannot have trading as your only source of income. That is something which I really made a mistake when I started trading, is, you know, not understanding that, you know, Forex cannot be the only source of income, especially as a beginner trader. You really need to have different types or different sources of income, you know, to boost you so that you can perform well in your trading. Because I'll give you an example, right? If you're only focusing in trading, number one, you will really be attached to the money which you are putting into your account. So it will be very hard for you to be able to allow your setup to play, you know, long term. In, for example, to catch even 100 pips will be very hard, because, you know, once you see small profit, you'll want to take out because you are scared to lose it. Or once you see, you know, the fluctuation of profit and losses, no, you'll become emotional and you'll want to come out of that trade. But when you have other sources of income, you know that, you know, even when I lose this trade, I do have other sources of income which can boost my trading, or which can still support me to pay my bills and whatnot. Then that way you'll not really stress about trading. You know, even when you lose, it will not affect you as much as when you only have one source of income. So I advise each and every one of you guys, especially the beginner traders, if you only have one source of income, try and do something else which, you know, can support you to pay your bills, you know, to support with different things, you know, so that you don't only focus, or you don't only pay attention to your trading, and your emotions won't really be attached to the money which you have put in your trading. I really hope you guys understood, or you know, you got some value in this video. If you guys really are not putting some of these things which I shared, I advise each and every one of you guys to really try and, you know, study these things and try and implement them in your trading. Anyways, if you enjoyed the video, please don't forget to drop a like button and subscribe. It's your boy Eliel, signing out. Peace.